Right, today I want to talk a bit about tariff shock, market jolt, and the 90-day gamble. Is this the bottom of the market? Okay, when I say the bottom, we are talking about the stock market. So in the wake of US President Donald Trump's sweeping tariff announcement, dubbed Tariff Liberation Day, global markets were rattled with the S&P 500 plunging nearly 13% in just 2 trading days. Now, the scale and formula behind the tariff shocked many analysts who hadn't anticipated such aggressive action. What followed was equally surprising. Under pressure from the sharp market sell-off, Trump abruptly suspended most of the newly imposed tariff for 90 days, barely 13 hours after enacting them. Now, this unexpected reversal sent shocks surging, but left businesses, not shocks, oh my God, I'm a mistake again. Sent stocks surging, not shocks, okay? Stocks surging, but left businesses, investors, and global leaders scrambling to interpret his intentions. So while the White House framed the move as part of a larger negotiation strategy, critics saw it as a concession to market volatility and a response to fears that aggressive tariffs could inflict lasting damages on the US economy, right? So is this a technical rebound or a temporary relief, right? What we are seeing right now. Now, the rebound could be seen as a technical rally, potentially lifting the S&P 500 back towards its recent swing high of 5,500. But the lack of clear fundamental makes it dangerous to assume a smooth recovery path. Without meaningful progress on trade deals or a coherent policy direction, any gains may be short-lived, unfortunately. Okay. So this is something that we need to understand and look at, because there's still a lot of confusion in the market. Just to give you an example, right? So we had Trump over the weekend, right? Some say backpedaling, some for Trump supporters, they'll say it's part of his plan. So right now, not only he stopped that, he imposed that 90-day pause temporarily to study and for countries to discuss with the US, right? During the weekend, he exempted, chips, computers, phones from being part of these tariffs. And basically that's like helping China, because most of the products that US import from China belongs to that category. So that in a way created that uh relief, and that's why you saw price actually going up much further. The US futures actually went up much further. But what didn't help was the Commerce Secretary Lutnick coming in and said that, what? This temporary, this tariff exemption that the Trump announced, this is more of a temporary basis. Okay, it's not going to be permanent. Don't expect it to be permanent. Now, this is the thing that everybody's facing. Is just like, what? One day you say this, another day another person say that. So who is actually giving out the real information, right? So these are the things that's actually happening in the market. That is the reason why I say lack of clear fundamental makes it dangerous to assume that this is going to be a smooth recovery path. Okay, so we need to see meaningful progress on trade deals, like I mentioned in the previous report. The next 90 days, if we get all the major economies announcing that yes, 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 we have done deals with the US, everything is good right now, then yeah, slowly but surely the market can recover. That's why there are some traders speculating the Trump put. So is the Trump put back in play? So the sudden policy shift echoes the so-called Trump put, a term from Trump's first term used to describe his tendency to ease off harsh rhetoric or policy once market took a hit. So rebound in both the S&P 500 and Nasdaq, despite the ongoing geopolitical uncertainty, suggests that investors may be betting on this pattern repeating. Okay, so the 90-day tariff pause may have been a deliberate trial balloon to gauge market and diplomatic reaction. So if things are not so good, then yeah, we can change. We can change. That's why I said suddenly, there's a 90-day pause. And right now there's these chips and phones and conductors. He understands all these tech CEOs, they're not going to be happy what's happening to the stocks, right? And all those that are in the retirees, they have the funds, and they're not going to be happy if they see the funds dropping due to this drop in the stocks. The investments are really getting hit and hit badly. Okay, so that is going to put some pressure on Trump and team. But there are other things that we need to look at, not just Trump's policy, things like inflation, for example, right? That's why the next part, we're going to ask this question: inflation just dropped, but is it real? Now, the April 10th CPI report surprised markets with a broad-based cooling of inflation. We had core CPI month to month, okay? It increased by 0.1%, but the forecast, they expected 0.3, so there's a drop of 0.2. Headline CPI went negative 0.1%. The forecast was positive 0.1. The CPI year on year, it dropped to 2.4% versus previous month of 2.8. The core CPI, minusing all the volatile stuff like food and energy, that dropped to 2.8%, down from 3.1. Finally, we have seen it going down below that 3% mark, right? So basically, this marked the first significant monthly decline in headline inflation in some time, and has sparked hope that this inflation is accelerating faster than expected. But markets, I shall say, shouldn't be too quick to celebrate. Okay, because there will be questions like, is this drop in inflation sustainable? The answer is likely not, and here's why. Number one, tariffs haven't kicked in fully yet. Many of the newly announced duties, such as the 104% tariff on certain Chinese EV and the 10% universal import tax, are in a grace period. Their full effect will likely be felt by late April and into May. That's first thing. Second thing, retailers may still front-load prices. Even if the products haven't cleared customs, businesses often raise prices preemptively in anticipation of rising costs, meaning May and June CPI could sharply rebound. Now, Fed knows it too soon to declare victory. As Fed Chair Jerome Powell stated, there is no expected progress on inflation this year, despite today's positive data. This aligns with Governor Dr. Adriana Kugler emphasis on keeping inflation expectations anchored and sticking to the 2% target. Now, for the Fed policy, will this CPI drop change their path? Now, market expectations shifted slightly after the report. The May 7 meeting, chance of no rate cut dropped from 79%, 79.6% to 62.9%. Now, for the June 18 meeting, probability of a cut rose from 72% to 89.5%. So that's why I said it's still going strong, that probably we'll see the first rate cut mid-year. Okay, so these are the expectations. So this signals growing market optimism, but the Fed may not be easily swayed, thinking that, for sure you're going to see that cut, even though the market is predicting it. Despite the surprise deep, right, the Fed will likely remain cautious. They have already indicated that the bigger risk is inflation re-accelerating, especially with tariffs acting as a new inflationary impulse. So now the question is that, so is this the low, given the inflation, the stress in inflation and everything? So if we look at the Fed Watch 2 probability and what's really happening overall, this question, was this the low? This could be the market bottom, but only conditionally. So based on Trump, he's backtracking, right? The Trump food and all this, he could be backtracking based on how hard the US has been hit, because he is not only facing this issue of market actually dropping, but the US dollars as well, right? Now, this time it's a bit different, because if usually when the US stock market drops, right, there will be this thing known as the flight to safety, where investors would go and buy bonds, um, shift all the investments into US dollars to, in anticipation of market turmoil. But this is not happening. We have seen yields rising as well, right? And this is showing that, what's happening over here. There's no flight to safety. People are not buying the US stock market. People are not buying bonds as well. So based on this stress, right, Trump and his team may reconsider their tactics once again. Of course, Trump's not going to admit that. He's going to get his people coming in and say that, hey, you know what? This has been Trump's idea all along. Okay, they can say whatever they want. We don't know. We can just have educated guesses. Now, this sharp rebound suggests that markets are responding not just to the tariff suspension, but also the possibility of policy flexibility remains on the table, which I explained just now. So with inflation showing a surprise dip and rate cut expectations rising, the ingredient for a recovery are forming. Okay, however, the rally remains fragile. Don't take things for granted. Tariffs haven't taken full effect, and both inflation and monetary policy are still at a turning point. The Fed is unlikely to shift stance based on one data point, especially with fresh cost pressures from trade still in the pipeline. Okay. So that said, the next 90 days offer a crucial window. If during this period countries begin announcing successful trade negotiations with the US, the perception of lasting inflation could ease. Markets may start pricing in lower inflation risks, improve global cooperation, and reduce economic uncertainty, all which could reinforce the rebound. So in that case, the current sell-off may indeed mark a capitulation low, paving the way for a sustained sentiment-driven recovery. But without clear progress, right? Sorry, hold on. Sorry. Now, without clear progress on trade talks or a consistent signal from the Fed, any rally must be treated with measured optimism rather than blind conviction. Yeah. So I know things are not that easy. It's not straightforward as everyone thinks it is, as it doesn't help if Trump comes in and say something one day and then changes it the very next day. Is not going to be easy, but nevertheless, that is expected of a Trump reign. So take things one at a time and let's see. Okay, so that's the fundamental report for today.